Good afternoon, everyone. Mike and Corey here today. Going to talk about some exciting topics. I'm going to hit on everyone's favorite company and favorite CEO. No, it's not ours. It's actually Tesla and Elon Musk. If some news that he is getting back in the car seat and going to work on automotive instead of government. So I'm going to hit that. We'll look real quick at Tesla's stock and the interesting ride it's been on. And then I'll pull back and look at the overall S&P on the year and the ride we've all been on. And then Corey's going to talk about one of our favorite topics, buying now but paying later, and Klarna and the responsibility, or is it irresponsibility? I'm not sure of that. And and then a great expertise, quantum computing, the solution that's still looking for a problem. So this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So Tesla, well, actually, we'll start off on, before I dive into Tesla, let's just look at the markets. So, sometimes when the markets are way down, you don't want to look. That's fine. I mean, that's probably a good, don't look if it's going to cause you to panic or not sleep at night. The markets have had a 6-day winning streak. And I want to say last week they were 17 of the last 19 up. So let's just take a step back. When we started this year, we did our quarterly, our beginning of year update. We said, yeah, 8% would be a good year for the S&P to be up. I know the overall average that I saw different analysts predicting were 12%, and the highest I saw was 20%, and the lowest I saw is the market would be up, I think it was 1.5 or 2%. So you're saying, well, 8%, 12%, that sounds pretty good. 20 sounds great. 2, oh, that sounds terrible. Well, when the market dropped over the last couple months due to the tariffs and all that, and the markets were down over 10%, all of a sudden 2% sounded pretty good, right? When the market was down 10, you're like, man, if we just end up break even on the year, I'm feeling pretty good about it. Well, here we are. We're back to break even on the year. So I think it's a good time to look at that. So you can see on my screen, I'm showing it. I don't have the full graph up, but you can see that the market dropped back. It hit its all-time high the middle of February. We were up about 4 or 5%. We're slapping high fives. Wow, we're gonna hit 20% this year. Everyone's feeling really good. Tariffs come out, more news comes out on tariffs, and by the middle of April, it was down correction level. It was down 10%. NASDAQ was down even more. And then here we are, right back pretty much where we started the year, within a few percent. So it's a roller coaster ride. If I said right now at the beginning of the year we'd be at the same place in May, you'd say, well, maybe that's a little disappointing. But after the ride we've been on, you're probably saying, I'm pretty happy to be here. At least I am. The NASDAQ, I'll show you the NASDAQ graph year to date, very similar. Pretty much follows it. And with our portfolio, very similar. We're definitely tech overweight, so we've experienced it. So let me get into Tesla, which is the favorite Mag 7 stock to talk about. Now, we don't have a direct position in Tesla in our models, but we do hold TXS, which is companies headquartered in Texas, of which the last time I looked, Tesla was the biggest one. So we do hold Tesla, at least indirectly. So what's Tesla done? So the big news in everybody, Elon Musk, wow, he's campaigning with the president. The stock goes up. Trump gets elected. Elon's part of the Doge. It's like, wow, everything's going great, except for he's really not leading his company. It's kind of running on itself. And the stock, we're going to take a look at this one, has been very painful to look at, where it has this massive surge up into the election, and then it drops 50% plus. So, but Tesla, guess what? It's back on the rise again. So what is Elon, why is it rising, or what are one of the reasons? Guess what? Elon is committed to leading Tesla for the next 5 years. And whether you like Elon or not, whether you think he's the too rich or not or whatever. I mean, he is a leader. He does, from everything I've listened to interviews with him and read about him. I mean, when he's dedicated to something, he's dedicated. Like he's putting in 80 plus hours a week. When Tesla was putting out cars and trying to hit a quota, he's like sleeping at the factory to work on this stuff. So I mean, that is a dedicated CEO when he's there. So, anyways, that's news. Corey, what do you think about that? Should we find you sleeping at the Ankerstar Wealth headquarters on the floor there?
I'm pretty close. I could get to. Oh, I'm close to. I'm close to the Tesla headquarters too. Maybe I can go back and forth. I did read a statistic. This was last year, but it really stuck with me. On if you're a long-term shareholder in Tesla, on any given day, so on average, you are 40% below the highs, just as a long-term Tesla shareholder. But of course, like Mike showed, right? You do get those massive runs. Last time I saw the math on it, like 93% of Tesla's valuation was based on future earnings. So they're going to need significant future earnings, which, hey, that's where the Optimus robot, that's what the self-driving cars and things are promising. So, it'll be interesting. And Musk can turn it on. We've seen it before. So we'll see what he's got this time.
Yeah, and a lot of times I get asked a lot about Tesla. It's the favorite of the Mag 7 stocks for people to ask about. They'll say, is it worth it? Should I buy it now? And here's the thing: if you think of Tesla as a car company, it is not worth it. It is, compared to Toyota and Ford and General Motors and all the other car companies, it is way overpriced. However, if you think of Tesla as a software company, a cutting edge into the future company, then it becomes that's why it's evaluated at. That's why it's so expensive. So if you believe that, that's where you would invest it. That's why we don't have a direct holding, but we do hold it through TXS. So we do have a piece of that. We're just not fully all in on it. So. And it is close to the Round Rock, the Ankerstar Wealth headquarters. So Steve and Corey and Jaden can bust on down there, ask some questions, and get a tour of the factory or something.
People like to fly their drones over it to get a look at what's going on.
We need maybe they're gonna put the Iron Dome above it, and they'll be zapping the drones out. That would be okay. We'll take us to buy now, sell later.
All right. Just a couple quick things from me. Nothing too consequential unless you're a shareholder in one of these things. But Klarna's losses widen after more consumers fail to repay loans. So Mike and I have joked, buy now, pay later, buy now, pay never, who knows? Honestly, I will say if you read a little closer in the actual numbers, so that's kind of a clickbaity headline, right? If you actually do look at their numbers, the amount, the percentage of loans, I guess if you want to call it that, that aren't being paid back is really not that high. Obviously, that gives you a lot of room for things to get worse, but it's really not totally egregious. So it's a little bit of a clickbaity headline. But they do say Klarna's net loss more than doubled in the first quarter as more consumers failed to repay loans from the Swedish buy now, pay later lender. All right, Mike and I saw that. This cracked me up. If I finance a burrito, that's my problem. If I finance 1,000 burritos, that's Klarna's problem, I guess. What do you think? Funny. You agree?
That's a good quote. I like that.
Oh
yeah, man, and just so I know when we covered this once before. This does hit your credit report. So I don't think there's a lot of, I don't know. I would say I don't think there's a lot of wealthy people that are going to use this service, but it's the people that probably can least afford it and pay interest and wreck their credit score. Like my kids, maybe, they'll be like, yeah, I think I'll do that. I'll buy my whatever now and pay later, and then if you let it go into, I mean, I'm sure they add fees and interest and all that, but then if it goes into default, then it hits your credit report. And someday when you go to buy a car or a house or whatever, or even when you apply for a job, sometimes they check your credit report. This is the kind of thing that can ding your credit. And you're like, why did I do that for $50 or $100? So anyways.
That's interesting. Yeah, I thought that quote cracked me up. The other news today, D-Wave Quantum, that's be ticker QBTS. Their shares soared 30% today, or a little even above at the peak. I don't know exactly where it's at right now. After debuting its latest quantum computing system, the quantum computer known as Advantage 2 is its 6th iteration and most advanced system. So what do we make of D-Wave Quantum's development, this new quantum Advantage 2 computer? It's been my view. People ask me about this stuff. Based on everything I can dissect from the quantum computing race, Google and Microsoft are in the lead. IBM has a product there as well. D-Wave Quantum does not meet like a scalable level of innovation that Google and Microsoft are seeking to hit. So that's just one person's opinion. What I think people like about a stock like D-Wave Quantum is that it's like a pure play, like saying, oh, I want to invest in quantum, so I'm going to buy Google stock. People don't really feel connected to quantum computing. Well, but even though they are, if you buy D-Wave, you maybe don't have the best technology, but you feel more connected to quantum computing because that's all that they do. So, and they don't have much revenue, and they're not like a big business, even though they have a pretty big market cap at this point. So again, that's just my opinion. It's not as fun to hold a Google or Microsoft for quantum exposure, but longer term, I think the winner is going to come from one of those two. But anyway, Mike, do you have an opinion here?
Yeah, well, we hold one of the competitors of D-Wave, which is Rigetti, as one of our ego stocks, exponential growth opportunities. Both these stocks, travel the same way, just like Corey said. They're a pure play. They're very volatile. When the economy when the tariffs came out, obviously I'm paying attention to it. They drop faster, because these companies actually have a chance of going bankrupt. But when it goes back up, they go up faster. So it's certainly more of a pure play. I certainly expect, and who knows when, if their products get good enough and they have the patents and the technology, there's no doubt these companies will be bought by Google and Microsoft or whatever, which to buy either D-Wave or Rigetti would be a drop in the bucket for them to buy. It'd be worth picking up all their patents and their technology. So if they beat, the Google and Microsoft at that game, and the big companies have the money to do it, but a lot of times they don't have the focus because Google's, on all kinds of things. So is Microsoft, where these companies are purely focused on quantum computing. Quantum computing's the future, at least that's what they say. If you came and pitched us Apple back in the late 70s or early 80s or whatever Apple started, we might have been like, I don't know, I don't really understand it. I don't, how can that beat the big IBMs of the world? But they eventually did. So it'll be interesting to see. It's going to be a multi-year thing.
Absolutely.
Awesome. Well, thanks everybody for hopping on. Tesla, quantum computing, and buy now, pay later. Those are the exciting topics of the day. We will talk to you later.